All right, we've got a lot to cover today. Are you guys excited? We've got another case study. This one is LASE. That's the ticker. This stock went up over 200%, and it did it in less than 2 hours this morning. And of course, I traded it. Now, just like our case study from yesterday, today's big percentage mover, well, it was a little bit of a tricky stock to trade for a couple reasons. Number one, the price was a little cheaper. Sometimes these lower price stocks can be they can be more grindy in the way they trade, and they're very thickly traded. They're very crowded, which I'll show you examples of and describe as we go through this episode. And so as a result, it's easy to get stopped out and then for it to go higher, which did happen. But I traded it a little more confidently because of the knowledge that yesterday we had a very similar stock that gave us a huge move. And that's how active traders who show up every single day have an edge, because you start to get dialed in with the current theme. What's working right now? And once you start to recognize these patterns, the next one you see that looks similar, you're going to jump on and attack faster and faster and faster. So my hope for you is that by watching these case studies, you're able to absorb this. You're able to be sort of dialed in with what's working in the market now, and you're able to implement some of what you're learning in your own trading. All right, so let's go ahead and jump onto the screen share here. We're going to go full screen into our case study on LASE. Okay, so the morning started relatively early today. We had a few different stocks that were popping up, and I broke the ice on my first trade at, gosh, let's see, what time was it? It was about 8:12. That was when I took my first trade. I sat down a little after 7:30 this morning. As is typical, I pull up my scans on my phone each morning. So at Warrior Trading, we have scans, of course, that you can stream, and you can stream on your computer if you'd like. But I usually, in the morning, will check on my phone. And so I just checked the scan. It's actually producing the audio alert through my phone. So I'll just check right here. I'll see, oh, what's moving up? And so when I did that this morning, I saw that we had a couple of gappers. They were like 50, 60%. And I was like, all right, I'll sit down and take a couple trades. So I took a trade on VVOS, which you could see on the scan here. It's up only 19% now, but when I traded it, it was up a little bit higher. This was before LASE came up on the scan. I considered ACRV, this stock here, but when I looked at the level 2, I saw that it was easy to borrow. And I usually find that stocks that are easy to borrow are a little choppier. So I left that alone. MYMD, I didn't take any trades on that. And then I had one other trade. So my first two trades, let's see, first trade on MTEM, I locked up $134. And then my second trade on VVOS, I locked up $850. So that meant I was up $1,000 before LASE hit my scanners. Now, $1,000 is my cushion. That allows me to start to take a little bit more risk. Now, if I give back a little bit of profit, kind of at worst, I go back to zero on the day. Hey, you know, no big deal, no harm, no foul. I walk away exactly where I came in the morning. Essentially, for me, I'm trying to do everything possible to not lose money, to not have a day where I walk away with less than I had at the beginning of the day. Now, you have to be a little bit careful of this, because if you focus, you know, exclusively on not losing, you can almost create the focus on losing, and then you start losing. However, we have to manage risk. We're active traders. That's got to be our job. So for me, I'm managing risk by not getting aggressive until first I built up a little bit of a cushion. So I'd already built up my cushion of $1,000 on the day. And at that point, I said, okay, I can take off my share size restriction, which is capped at 5,000 shares, and I can start being a little bit more aggressive. And then LASE hits my scanner. Now, when it first hits my scanner, I observed a couple things. Number one, this is actually not the first time it hit the scanner. It hit a little earlier. By this point, it already had 8 million shares of volume. But by the time it started to pull away up to 250, 260, 270, that's when I was starting to consider it. And I actually didn't take my first trade on this one until 350. So I'll show you the chart in a second. But so the way I find these stocks is, it's fine. I'll call them back. It's not that important. So the way I find these stocks, of course, step one is on the scanners, my high day momentum scanner and my top gainers scanner. Okay. Then I'm checking to see what's the catalyst. Now, this did have news that came out at about 7:30 a.m., which is fine. It had a headline. Was it a super solid headline? I don't, it's hard to say, but it is a headline. So there was a fundamental catalyst, a reason for it to go higher. I pull up the daily chart and I'm not really impressed. I see that the stock has gone from $1 to $2.40, dropped back down, popped back up, dropped back down. The 200 moving average is sort of right here at about, $1.70. And I didn't see anything interesting. It's not a recent reverse split. It has a couple days recently where it had high volume, but it didn't go higher, which sometimes can be a little bit of a red flag because now you have some people who are bag holders. They're holding the stock at these higher prices. They got in too high. They don't have the discipline like you guys have, I hope, to cut their losses. So they're holding and hoping. And when it comes back up, they're going to be selling, which means we're going to have selling pressure here until we've cleared out all those bag holders. So now it's got to get above these levels to really get interesting. But it did. It got above 240, 250, and then it makes its way up towards 3. So I looked at the 10-second chart, and when it first popped up, it pops up, pulls back, punches higher to 250, pulls back, double tops, and sells off. So this is our double top. Sometimes if you squint a little bit, you could see this is like a little devil shape with the little devil horns. And this is very, very bad. Very, 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 very bad. I don't like to see this double top. Now, some of you might say, oh, that looks like a little kitten. No. This is not cute. There's nothing fun about this. This is not a kitten. This is the devil. This is terrible. So we've got those big topping tails. That's a reversal indicator. Now, it does sell off. It comes all the way back down here. But then it kind of does this slow rally back up. Gets above the volume weighted average price, this orange line here, pushes up to 225, pulls back up to 230, then up to 235. Sideways, flushes down, high volume selling, highest volume candle of the day. And then it starts to kind of grind higher. Gets up to 280, up to 290. It pushes here up to 3. And right at $3, we again had a lot of resistance. Now, it was doing more of a flat top. The problem was we consolidated sideways for so long, I was concerned about a jackknife where it pops up and flushes back down. And so I didn't want to buy it right here. And what you see is that it does pop up and it drops back down, but it got right back up above this level. And typically I'm a buyer right here at 305 with a stop at about $3 because it's proving it can hold the psychological resistance of the $0.50. We know $0.50 and whole dollars are significant areas of resistance. And in this case, the fact that it was holding it, I felt was really important. So I should have punched it there. And I didn't because it was a little crowded. And when I say crowded, I mean that the level 2 is really stacked. There were huge orders on the offer and there were huge buyers on the bid, which makes it feel like a tug of war. Like this thing's not even going to move 5 cents. And that's what I felt. I was like, is this even going to go up 5 cents, 10 cents? Because for me, when I'm trading, and I'll grab my notebook here. Let's see, or my whiteboard. So when I'm trading, I generally want to get at least 15 to 20 cents of profit per share. And the reason is because I pay ECN fees on every share that I route when I direct route to NSDQ, NASDAQ, let's see, EdgeX, BATS. These are market makers that you can route to, or they're ECNs. And the fee is about 0.004. Some of them are a little bit different. One of them might be 0.003, the other's 0.004. So the result is that times 1,000 shares equals $4. Okay, well, that's $4 to buy. It's gonna be another $4 to sell. So that means round trip, if I buy 1,000, I gotta sell it. So 2,000 shares total traded is $8. Well, 1,000 shares, I mean, see, the problem here is that now, essentially, to buy and sell, I'm losing a penny. So every penny is $10 with 1,000 shares. I'm losing a penny to fees and commissions. So if I take 10,000 shares, 10,000 shares times 0.004, I'm looking at $40 to buy and another 40 to sell. So even though I get $100 for every penny, that first $100 is going to fees and commissions. Okay, so this is a problem. This means, especially on lower price stocks, if I'm getting in at 3 and I'm getting out at 303 for 3 cents, I'm losing a third of that to fees and commissions. If I get in at 3 and I sell at 310, I'm losing 10% to fees and commissions. If I get in at 3 and sell at 320, it's only 5%. Now, historically, for me, commissions have been about 10 to 15% of my profit. Last year, however, they were historically higher than they've ever been. And the reason was because I was trading with larger positions, because I had just come off of the hot year of 2021, 2022, etc., 2020, of course. And so I was trading with big positions, but I wasn't getting big moves. So with big size, and I was only getting 8 cents a share, maybe, I was losing too much in fees and commissions. So what I know is that until something I feel has the potential to give me, 15, 20 cents per share, I'm usually not going to be that interested in it. And that meant when I first saw LASE coming up at $3, I was like, I don't know. And it pulls up, drops down, comes back up. And I was like, if I get in at 305, stop is 3, but is it really how high is it going to go? And you can see it only went up to about 315. So it goes up 10 cents. Now it drops back down here. And I had an order ready at 316, but I was kind of like, well, but then isn't it going to run into resistance around 325? Because these lower price stocks, we know that most stocks up to maybe $20 or even higher have resistance at $half and whole dollars, right? So this is just approximate, but so you'll have resistance at $3, $3.50, and $4. But cheaper stocks, well, they've also got a little bit of resistance here at $3.75. And they've got a little bit here at $3.25, approximately, $3.25. And sometimes these ones start to have resistance almost every 5 to 10 cents when they get really thickly traded. So that's pretty much what happened here. I saw it at 316 and I thought, that's tempting, but isn't it going to hit resistance at 325? That's only 9 cents. It just doesn't feel like enough. Now, I was impressed when it went all the way up to 325. It did pull back, as I expected, right here. And then it broke through 325 and went pretty much straight to 335. Little pullback up to 340. Little pullback, pop, drop, back up to 345, dip down, back up, dip down. And right here, I took my first trade. So right here, I bought at 350. And I basically it was similar to this here, except that it was already starting to pull away right in this area. Volume was increasing. And now we were getting to a price where I thought if we broke 350, maybe we would pull away and start to go parabolic up towards 4. So I was hoping we would get a squeeze right to 4, but 375 was the first target. And it ends up going almost exactly to 375, right? So from 350 to 375, that was fine. That's a nice 20-cent winner. So that put me in the green. That was my first trade. And sorry, this is a 10-second chart, not a 5-minute. Now, I took my next trade a little bit later. So it ends up going here. This was this whole move up to 375. And I bought at 350. So I was getting in pretty extended on the 5-minute chart. But I did it because I felt like it was starting to pull away. Volume was increasing and we were starting to go parabolic. Then we had this red candle here. And look at how much the volume dropped. All of a sudden, people were like, I don't like this anymore. I don't even want to trade it. And I think traders were feeling like this was the front side of the move, and now we're on the back side. MACD had crossed over on the 1 minute. We had this sort of pop up, and then we rejected. Then here we had this nasty flush and rejection. So I think people thought it was pretty much over. And when I was looking at it right here, I was like, I can't buy it here because it's too extended off the 9 moving average. But as it started to get closer to that 9 moving average, I started liking a little bit more because I thought, okay, well, now we're getting close to support. And then as I saw the MACD starting to curl right here, I thought I like that too. And so I took my next trade getting in right here at 374. I got in at 374. I tried to get in as I saw this volume coming in, and I added as it pushed higher, and we came straight up to $4 a share. Now, it ended up consolidating here again for quite a while, and then it punched through to 440, but it did it right at 9:30 at the opening bell, and I just didn't feel confident holding a position from pre-market into the open. So actually, my last trade of the day was getting a trade in this area and getting stopped out. Although I only gave back maybe like $25. It was a very small loser. Okay, so the results. $5,058.18 of profit on LASE. Not bad. I really can't complain about that at all. That's some solid trading. And I'm finishing the day at $6,000 in total profit because remember, first I had to get my cushion. Got my cushion on VVOS and MTEM. That was $1,000. And then, LASE started to pop up, and that's what I focused on. So overall, it was a solid day. Now, yesterday, if you recall, we had AUUD, and this was similar. It was very thickly traded. It was a grinder, high volume, sort of similar chart. Pushes up, sideways, pulls away, right? So I was looking at that chart yesterday, and I thought, again, these are sort of similar. And I think that that's going to give you an edge when you start to recognize these patterns, that they're happening again and again and again. So the theme this week, and of course it's early in the week, but the theme right now seems to be on grinders. So stocks that are grinding higher. Last week we had a little bit of attention on penny stocks. This week it just started with AUUD yesterday being a little bit of a lower price grinder, and then things pulled away. But I am cautious with these grinders because sometimes the first trades on them, they can be a little tricky. They'll pop up, they'll drop, and we did have a couple pop and drops. So on MTEM, this was the first one I traded, and this was a nasty pop and drop. I was a little annoyed. I jump in it, and I got in at 295 for the break of 3. And, it hits a high of 310, but it was just like, whoa, there's a wall of sellers here. So I got right out, and look at all this selling volume. Just a ton of selling. So there were more sellers than there were buyers on this stock at this time. People didn't like it, as it turns out. And it ended up going red on the day. So it went from gapping up to red on the day. That's a big swing. So, that's MTEM. There were a couple others that were like that. MSGM. This one was a little choppy. So I wasn't too into that. Now, I mentioned earlier ACRV being easy to borrow. I see that easily. It's this green E means it's easy to borrow. If I type in BTTR, whatever, this one's on locate, so you'd have to locate shares. And you could do that. You could punch it in and say, oh, I want to locate 100 shares, and they'll tell you these are the prices. So this is the cheaper vendor right here. So $1. 1.3 cents per share. So 10,000 shares would cost you $139 to borrow. All right. Now, you would still pay the ECN fees, the routing fees. So it does increase your commissions in total for sure. But anyways, so the fact is when a stock is easy to borrow, I often find that traders are going to be very quick to short it and that the first moves get rejected. But if it can hold up well, then we can get continuation. So anyways, that's my recap here for today. I hope you guys enjoyed it. And by the way, if you have not already cast your vote for the class I'm going to teach this week, make sure you do that. There will be a link pinned to the top of the comments and in the description. I'm going to host a free class this week, and I want you to cast your vote to tell me what date and time is the best for you, and then we'll email everyone the day that we end up picking. Okay, so I hope you guys cast your vote, and I'll see you for my recap tomorrow. Thanks as always for tuning in.